All right, my beautiful friends, it is time. It is Monday, and you and I are going to get back to work here. So, Monday, yes, February 22nd, 2021. The story right now is clearly this rising 10-year yield. I mean, it's all over the financial channels this morning. Bloomberg, Fox Business, CNBC. Look, they're finally paying attention. They're so behind the curve. And again, this is getting investors and traders somewhat spooked. They don't know what to make of it. Okay, understand what has happened now for over a decade. Suppressed rates, lower bond yields have inflated a massive, massive stock market bubble. Now, okay, people are getting rattled. Rising rates appear to be or could possibly have the opposite effect. And that's exactly what is going to happen at one time. I believe right now the market is trying to digest or maybe even adjust itself to this rising rate, rising yield environment. We have to see how this plays out. So again, we got this rising 10-year yield. Right now the dollar has a little pressure on it. So you do still have this compensatory mechanism that I cover all the time manifesting itself in the market. But stock futures right now, as I am doing this video blog, are lower across the board. Trading doesn't start for about 45 minutes. And the markets appear to be ready to open lower this morning. We'll see how this plays out. I'm just as curious as you are to see how the market is going to digest it. Is the market going to readjust? I believe we're going to see this market continue to stay distorted. I also believe we're going to see a PE ratio expansion cycle, meaning the market, depending on how this plays out, understand, the market wants to see some stabilization here with regard to that 10-year yield. The market, not me or you, from a consumer standpoint, want to see that the dollar weaker. The market wants a weaker dollar. Period. If the market gets what it's looking for, I would expect to see an expansion or a multiple expansion on stock PE ratios, their price to earning ratios. Okay, what this will do is further inflate the stock market. Again, we have the promise, and I mean promise, of easy money being pumped into a dead economy for as far as the eye can see, with Janet Yellen staying now with the Treasury. The Treasury and the Federal Reserve are lockstep with vastly, and I can't overstress that word, vastly inflating the debt. That's the only thing that's keeping this market where it is. And I think if we get a stabilization in the 10-year yield, we get a weaker dollar, we're going to see a multiple expansion with regard to PE ratios. Market will go up. If, on the other hand, we continue to see this 10-year yield rise like this, the dollar gets stronger, the market's not going to like it. The market is not going to like it. And not just that. I've covered a lot lately. This market has gone parabolic. Record high, record high, record high, record high, record high, record high. It's gone stupid. We do need a correction here. We need a pullback here. For me, for my Lions, I think we would embrace this. It would allow us, as long as the 10-year yield remained stable, the dollar got weaker, to adjust our positions or add to positions that we are in, getting in a better price. That's what it's all about. You have to pay attention to the dynamics in this market that I cover every freaking day. Crude oil right now is catching a bid. Okay, you know how that works. Higher crude, boost the energy sector, boost the financial sector. Crude oil is the lifeblood of the military-industrial complex. You know that too. So again, they're going to play their games with crude oil. Right now, gold and silver are catching a nice bid. Cryptocurrencies are getting hit. Bitcoin was near 58,000 I talked about this a lot over the weekend. Check my newsletter. It now is about 53,000. That's a nice drop here. Would I like to see it drop further? Absolutely, I really would, and I think that would be a buying opportunity with regard to Bitcoin, with regard to the other cryptocurrencies as well. Good. Let them fall under pressure. You understand? These things too have gone para-freaking-bolic. You need a pullback, establish a floor, you go higher. That's how markets work. Okay, I don't think a lot of you understand market cycles, market dynamics, business cycles. I cover all this, all of it, in my book, A Not So Random Walk on Wall Street. And if you are a crypto investor, or if you're a stock market investor, a derivative investor, even an alternative investment investor, gold, silver, platinum, palladium, I don't care, artwork, anything it might be, you must understand market cycles. You must understand business cycles, how they work. And I outline all of this in my book, A Not So Random Walk on Wall Street, for which you can get right off of my website, traderschoice.net. There's a link in the description of this video. Anyway, so let's put this together real quick so we have an idea of what's going on. Yesterday, in my markets a look ahead, I told you, follow the 10-year yield, follow the dollar, follow crude oil, the unholy trinity here, and you will be able to gauge as where the stock market is going to go. The stock market is a derivative as to what's happening in the debt market, period, the end. Once you understand that the entire stock market is a derivative of the debt market, henceforth why the Federal Reserve continues to rig the debt market to the highest order, you can understand where this is going to go. It's not hard, and you can follow this as well right on my website, traderschoice.net, top of the second page. You got everything you need to destroy this market. Speaking of that, my lovely website, for you stock traders out here, if you go to the second page on my website, at the bottom, you will find a stock screener, which tells you what to buy and what to sell. All right? It could not possibly be easier. You can use this to buy and sell options as well. If you see, let's say, for example, Microsoft has a buy recommendation, you could buy the stock, you could buy calls, you could sell puts. Take advantage of this. It's not for me. It's not for me at all, and it's free for you. You understand? You got to find resources to utilize, and I set this up for you, all of it. So it could not possibly be easier for you to understand what you should be doing. Now, knowing that, for you guys that stack gold and silver and don't give a damn about the stock market or anything else, well, what do we know? Central banks are going to inflate on an epic scale. So you should be betting against the debt, becoming your own central bank. It will never stop. Let JP Morgan play their games. JP Morgan will continue to play their games until they can't. You understand? It doesn't matter how much they get fined or how much legal trouble they get into. They never get in trouble. They just pay a lovely fine. No one goes to jail. It's all part of the cost of business. They will suppress the price of gold and silver until they can't do it anymore. So take advantage of that. You understand? This is so simple to realize what's going on. The environment we are in continues to be risk on. So assets like gold, silver, platinum, palladium, more specifically silver will remain suppressed, risk off. This will flip. We're going to get a massive risk off environment at one time, and gold and silver are going to skyrocket again. This is all by design. Nothing is what it seems, but if you can just look down the road a little bit, you'll understand what you're doing and why you're doing it. It could not be easier for you. Again, I try my hardest to outline these things in the most simple way I possibly can. And for my lions and my traders out here, everything you need is right on my website, traderschoice.net. Take advantage of it. Just go over to it and look what's available for you. And it's all free. Anyway, look, that's the story here. But I cannot stress this enough, and I'm going to let you off with this. Focus like a laser on the 10-year yield, the dollar, and crude oil. Mostly the relationship between the 10-year yield and the dollar. Understand that simple dynamic that I cover all the time, and you will have a very, very good idea as to where the stock market is going to go, and other assets as well. It can't be easier for you. It really can't. Anyway, that's the story. That's where we are. Let's see how this plays out. I will have my eyes glued on the 10-year yield all day and the relationship to the dollar. What's going on with these assets, as, of course, crude oil as well. Anyway, that's it, people. Love you a lot. Please share the video. I'll see you at the end of the day. We'll sum this all up. We'll evaluate the whatever comes out of the woodwork or out of the mouths of Fed presidents and the freak show that we are in, because this is a freak show of the highest order. I will see you later.